Hi, welcome to the Market Alert for Friday, the 2nd of February 2018. So yesterday we were looking in the daily chart for the market to drive through the upside figures there, the 62 and 76%. The market did this yesterday, and we see a buy signal coming in, and also a lot of volume building here as well beforehand, and then the market just exploding to the upside, which you see there, and then coming back and settling down before moving higher once more. As we've seen before, the backdrop of this market is on the bullish side, and this continued yesterday. Let me just take out the check mark there and then just drag these across. So you can see that we had a 76% retracement, run up, run back, and then there's a small one in here as well. The market finds support also at the psychological level there of 140, and then the market moves off this once more as well. And as we've seen from the background, this market is in a new bull move as the US dollar continues to move lower. Had a bit of a blip here, but that's perfectly normal. We're above the 76% now. We've got to drive through this area in order to move higher, and that's the recent high of 143.45 there. And in the weekly chart, you can see now, even though we've got an inside bar so far for the week, we're still heading back up to this area, 76%, and also the 143.87 level there. So that's the pound. Also yesterday, May came out and said that we are leaving the customs union, and whether you're for Europe or against Europe, I don't do politics. I couldn't give a flying pope about it, because there are far more pressing matters, and that's to do with debt. And you only have to type it in. I just typed in bad debt in Europe, and then was presented with a whole host of issues that are going on in Europe. Bad debt problem in Southern Europe is the worst in the world. We've got European debt is a European debt crisis. Is not just Greece that is drowning in debt, and it's not. And this is why they don't want us to leave, even though there was a democratic vote like it or not like it. But you may be glad one day when we're out and this lot goes pear-shaped. Italy's bad debt problem refuses to go away. I don't know how many times the banks have been bailed out there. Eurozone debt crisis, key charts you need to understand. Very good article, actually, that one. You'll see how bad that is there. And then the next European financial crisis. And this is all bond related. And speaking of bonds, before we get into the Dow, we can see this is the 10-year bond. This is a 20-year chart that we've got here. And you can see down at 2000, then we had the crisis of 2008. And since then, the money that's been printed, there's 4 trillion on the Fed's balance sheet, which they're trying to offload in rising interest rate market and environment. So it's a really bright thing to do. That is, we've got 4 trillion in bonds we'd like you to have, but we can't pay you the same rate because we're issuing new ones with a higher rate because we're putting interest rates up. Clever people these are, honestly. So yesterday there was a bit of a bloodbath in the bonds. If we just go down to a smaller time frame, let's go to 3 months, see what the chart looks like there, and you can see the trend there. And the stock market has managed to hold up against the bonds recently, but it's struggling at the moment. It's certainly put the brakes on the Dow for the time being, but watch these bonds and also the yield, if I can find it. Also keep an eye on this yield as well. We're 278, down just slightly, but when you look at the chart here, you can see that that sort of 3-year high that most people are talking about is on the radar at the moment as well. So it'll be interesting to see what happens when bonds, or if the interest rate on bonds gets to 3%. Even the big bond players in the market also now have turned bearish. And the problem is, with this lot starting to go south, it's going to put huge pressure on the stock market. So the tax cuts and everything else that Trump's made, you'll just have to hope and pray get into the market beforehand. But this is the mother of all bubbles, the biggest bubble in the world, and it's not looking good. That's for sure. This market continuing to move to the downside. So keep an eye on the 10-year bonds there. But just going back to the Dow yesterday, say it all started off quite swimmingly, the market moving higher. We had new buying, some selling pressure, then the market managed to absorb this and then hit a wall here, got a bit of selling. Market retraced a bit, and then they were managed to move the market up quite nicely through the afternoon session. But then into the evening, when the bond started to slide, we saw the selling coming in, and they did their best to try and buy it back. We had a bit of a dead cat bounce, and then the market found support before moving sideways on the overnight, and has now come back and retested and gone through the level here. I'll just put this on so we can see which one we've got here. This is the 26,100 level. So it's struggling a bit at the moment, and the eagle-eyed amongst you will notice that the market's making lower highs on a daily basis as well. If this market's going to move higher, it's got to drive through this. Otherwise, we're going to close below the 20-bar average as well. At the moment, sideways, stuck in a range and going nowhere. News today, big day today. We've got the non-farm payroll figures out at 1:30. We've got a forecast of 181, previous 148. That's manipulating figures if ever there were. Anything that comes out at higher than the 148 then is going to give the market a bit of a boost. So we can see what they're playing at there. Anything to keep this illusion alive and the bubble inflated. And implied volatility, let's have a quick look at this. So the implied only down slightly yesterday. I'm surprised actually. What this is saying to me, down 0.03 is saying that the options sellers are quite concerned about what they're actually seeing at the moment, and they're keeping the premiums loaded in these options. And finally, in the old crypto sphere, things are not looking too bright there either. Bitcoin lower once more. There's no stopping the pullback. I thought we may have held in this area here, but not to be the case. We've actually taken out the low that we looked at yesterday, which was get the right tool on second, which we've got there, and you can see the 76% has now been taken out as well. Let's just make this a bit bigger so we can see what's going on in this area here. So you can see there at the moment the Bitcoin market is actually below the 76%, and which is interesting, because really there's the next sort of downside on this one, if it continues, is you can see support here in this area, and then otherwise it's down we go all the way down to the recent low of this bar. If I can find it, it's 555.55, all of the fives there, if the market has a shakeout to this level. But we'll see if it manages to come back above the 76% area first off today and over the weekend. Right, I think that is it for today. Say non-farm payroll figures out today. Let's see how things pan out with this, but keep an eye on the bond market, because the biggest bubble in history is starting to unravel, which is not good. This may cause a bit of a problem for Trump and his plans if this lot continues to unravel and the yields get above 3%, because as I said earlier in the week, it's going to cost more to create debt to keep things afloat. It's also going to cost more to service the debt, even though you may have the revenues coming in from the tax cuts. It's going to make things very, very difficult. The next financial crisis is starting to appear by the looks of things. Right, that's it for this one and for this week. I will see you in Monday's edition. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.